Welcome everyone to Vested Interest. This is Shane back again for the stock pick of the day. It is October 4th. We are going to take a look at one out of the energy sector today. It's one we've looked at in the past on this channel. It is Schlumberger. They have rebranded themselves as SLB. That is also their ticker. They are again out of the energy sector. Let's jump right in and take a look at this company. If you want to know more about Schlumberger, check them out, www.slb.com. That is their homepage where I pulled this information from. Every great legacy starts with a bold vision. Born in France in 1878, Conrad Schlumberger conceived the revolutionary idea of mapping subsurface rock bodies with electrical measurements. His technique would serve as the spark for a new disruptive name in energy. Conrad and his brother Marcel began working together in 1919 to change the face of subsurface exploration. So they have been around for well over 100 years here. 1960s, SLB grows from the ocean to the moon. SLB tech began to be used in new ways, from uncovering sunken vessels with electrodes to producing or providing calculations to NASA during the space race. Meanwhile, the company was listed on the New York Stock Exchange in 1962. So in 62, they became a publicly traded company. 1990s. In the 90s, SLB launched several products that revolutionized drilling and logging operations, improving precision and cost effectiveness like never before. At the same time, SLB continued to make strategic acquisitions in partnership with other companies and a scientific community to unlock new possibilities. By 1991, the modern SLB company had come to life. So this is really a company in oil and gas discovery. They provide a lot of technology to oil and gas companies. As the world, and up to today, as the world searches for new and better ways to access energy, SLB products and services are more essential than ever. New connected tech has improved efficiency and information sharing for more effective drilling in oil and gas, while new offerings for growing new energy sector keeps SLB on the cutting edge. One of the things that I did not highlight in the snippets here, they do have their hand in the carbon capture, which seems to be the new hot buzzword. A lot of people looking at that as a way to offset their carbon footprint. Again, they have their hands in everything around oil and gas, energy production, energy technology they provide to a lot of the oil companies that are out there. So this is kind of like the gold rush, right? You didn't necessarily want to be the person out there looking for gold, but if you were selling picks and axes and shovels to the people who were looking for gold, you did far better than most people who were out there panning. This would be kind of that same idea. Maybe you don't want to pick one or two oil companies, but picking perhaps the provider of the information and technology that they use is a better way to invest in this sector. That's kind of how I'm looking at Schlumberger. Again, www.slb is their homepage. And they were down 4.74%. We are talking about Schlumberger Limited, ticker SLB. Again, Schlumberger recently rebranded as SLB. Closed the day out at $55.83. 52-week range as low as $39.13, as high as $62.12. So they are floating in between their 52-week high and their 52-week low here. Average volume 9.1 billion. Today's was 10.9. And you can see that sell-off, even though it looks like they might have tried to recover here midday overall, just to sell off throughout the day. Market cap of $79.345 billion, a beta of 1.83. So they are more volatile than the overall market, almost twice as volatile here. Price to earnings ratio, PE ratio, a little higher than I would like to see it, 20.45. But not egregiously so. This company seems to be growing fast enough to justify maybe a higher PE, though I would like this under 20. EPS is sitting at $2.73 per share. Next earnings date is coming up October 20th. Forward dividend is $1 annually. They are a quarterly payer. We'll see that here in a little bit. Low dividend yield on this one, 1.71%. So if you could get them to pull back closer to this 52-week low, obviously you could get them a little higher, maybe even in the 2% range. Might be worth looking at or throwing on the watch list to see if you can wait this one out and see if it hits that 2% range. Ex-dividend date is September 5th. You would not be in line. Well, let's see. Yep, dividend date's paying at October 12th. So you wouldn't be in line if you bought them now for this October 12th dividend payout. And according to Yahoo Finance, they have a one-year target estimate of $67.11. So it looks like they see them setting a new 52-week high and a little bit of price appreciation as far as the stock price goes. Now, I like to look at statistics And we are going to look at dividend yield theory to see if this one is potentially undervalued. And to do that, we go down to dividends and splits, click on statistics, go down to dividends and splits, look at their 5-year average dividend yield, 3.58, compare it to their current 1.71%. Since it is lower than their 5-year average, this one speaks to some potential overvaluation. Now I need to look at this because I believe they had a dividend cut possibly. But I'm not quite sure. I'd have to go back and look at this one to see if that's the case, because that seems awful low compared to their 5-year average. But again, if you were to wait for them to pull back, you could obviously get a little higher than that. But if they had a dividend split, or I'm sorry, a dividend cut, that may account for this. If you know, drop in the comments down below if they have had a dividend split or dividend cut here recently. Payout ratio is low at 31.14%, so they do have a lot of room to increase that dividend payout over time. Now, I like to go into financials. You're going to find a lot of good information here. Balance sheet, income statements, revenue. Is it growing over time? Are their assets over liabilities looking good? You want more assets over liabilities, right? Do they have growing revenue? Are they paying down debt? Are they increasing debt? What are they doing in their balance sheet and income statements? How are they doing financially as a company? You want to look at all that information. Also want to look at free cash flow. We want growing dividends over time as dividend growth investors. So we want growing free cash flow because that is what dividends are paid out of. So we went back to 2019. You can see here $3.4 billion in 2019. 2020, a drop to $1.7 billion. And you're going to watch the repurchase of capital stock here as well. Even though it had a real good year in 2019, they also repurchased a big chunk of shares. This big drop and a less repurchase of their shares does not account for that drop there in 2020. Now, granted, a lot of oil companies had an issue here, and that probably was driven by the COVID-19 issues, but still something to be aware of. 2021, a bit of a recovery here, back up to $3.471 billion. 2022, another drop down to $2 billion. And then it looks like to date right now, $3.1 billion, even though you can see here, repurchase of shares. This right here is what I want to see. Another big chunk of repurchase of shares. So I'm going to actually call it from 2019 to date. I have growing free cash flow because this repurchase of capital stock plus the 3.187 billion where they're at would definitely account for the potential decrease from 2019 free cash flow. Even though they haven't hit 3.4 yet, they repurchased almost twice as many shares. So repurchasing shares over time, looks like their free cash flow is a little bit up and down, but overall growing over the long term. So that's good to see. Now, I always recommend more than one source, so I like to look at stock analysis. Yahoo Finance was the previous page. You pick any sources that you like. Just make sure you're looking at more than one so you can back check the information you are getting is accurate. And they have 14 stock analysts that have taken a look at this. They call it a strong buy on this one. And they have a low estimate of $59, and it currently sits lower than their lowest estimate. So if it was to come back up to their low estimate of $59, that would be a 5.68% increase from where it currently sits. They have an average estimate of $68.07. That's pretty close to what we saw with Yahoo Finance on the previous page. That would be a 21.92% increase in the stock price. And if it happened to hit their high of $77, that would be a 37.92% increase in the stock price. I like to go into statistics, look at return on equity and return on invested capital. I like 10% or better. This beats both of those metrics. Return on equity, 22%. Return on invested capital, 19.80. So both of them just about twice what I look for. I also like to look for earnings per share growth. I like 5% or better here. 3 times that here, 15.39% forecasted earnings per share growth. And a bonus here, revenue growth is estimated at 9.79% over the next 5 years. So very nice numbers overall. The only thing I could say is maybe a bit more of a pullback on this one would be warranted, back closer to that 52-week low, though all the metrics right here look pretty good on this one. Now again, very low payout ratio on this one, very high dividend growth, 54.17% dividend growth. So even though it has low dividend yield right now, very, very high dividend growth. And I'm not saying they're going to maintain this 54% for very long, but if they maintained it for any length of time, even over the next 2 or 3 years, that 1.7% dividend yield would increase dramatically. Went back to September 1st, 2020, 12 cents and a fraction of a penny here. It does look like they held it through 2021 at that 20 cents, 2022, 0.17% here, or 0.17, 17 cents and some change. And then most recent increase February 7th, 2023 up to 25 cents. So recently, at least over the last few years, they have been raising this dividend. Now keep in mind, oil and gas, anything around the oil and gas sector is cyclical, so they are having very good times right now. And I think that may continue into the future. You have a lot of people like Buffett buying a lot of oil and gas companies. I know he's had a big purchase in Chevron, Occidental recently. So they foresee, at least some of the big ones, foresee oil and gas being a good place to be right now, at least for the near term. I think oil and gas is going to be here for a while, ladies and gentlemen. Even if we shift a lot of our industry to electrical cars, electrical trucks, all that electrical transition, EV transition, that's really going to take decades. It's not something that's going to happen overnight. We don't have the infrastructure for it to happen overnight. So we are going to be in oil and gas for, like I said, at least the next 2-3 decades at a minimum, in my opinion. It's not going to be a fast transition. At least I don't think. This is the vested interest stock screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I'm interested in investing. You can pause this and go through this. Well, that is it for this one. Let me know what you think of Schlumberger. Let me know what you think of the energy sector in general. Is it one that you're invested in? Is it one that you're looking at or staying away from altogether? Oil and gas, like I said, I think it's going to be here for a while. I know some people are looking more at renewables, but I think whenever any company provides opportunity, that's what we should be looking for. So that is what I'm going to continue to do on this channel. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share the stocks we're watching, stocks we're avoiding, just tips and tricks that we learn along the way in the journey to financial freedom. Investing together, we can share that in the comments down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk and money. So never invest any amount of comfortable losing. Always do your own research, best based on your situation, circumstances, and select criteria, or see the advice comes to a certified financial advisor.